What's going on, guys? Welcome back to another video. So straightforward, we're going to talk a little bit about 401k. We're going to talk about the stock market. We'll probably mention the coronavirus. And this is really all in light to help you guys understand, rationalize the market, and not freak out. And to know that even in these bearish kind of moves, Connor is still a long-term investor. You guys might see me make videos about bearish the stock market. It's going to go lower, but then I never really touch on how I'm actually investing throughout these time periods. So this video is specifically made because of the video I made yesterday. So what we're going to do is look at this email on the computer screen right now. So this, what we're looking at, is an email that I sent to my accountant on December 29th of 2019, which is actually my birthday, believe it or not. So the email reads, Casey, going forward into 2020, can we decrease our monthly contributions to the 401k down to $700 a month? Ideally, because I feel the market is very high right now and I would like to reduce the amount of money I'm investing at these high prices. I believe the market will end lower in 2020, and at that point we will increase the contributions towards the end of the year of 2020 to take the full 401k max contribution. If you guys don't know what I just said, real quickly, when you have a 401k, the government will allow you to put in a total of $19,500 into your 401k per year. That's the law. It's literally the law of the 401k. A 401k is a law. That's all it is. It's an investment law that your government is allowing the citizens of the United States to take advantage of. So Connor, the citizen of the United States, is able to take advantage of the 401k max contribution of $19,500 per year via the government's rules. So that means each year in my 401k, I can put in $19,500, but no more, okay? So you will see in this email that I told my accountant, let's reduce the amount of money we're investing in December of 2019 when the market was at all-time highs. Knowing we would probably go lower in 2020, why would we keep investing $1,800 a month at high prices when we can reduce it to $700, still be investing, but wait for the market to go lower? And then, if the markets do end up lower by the end of 2020, even lower than where we're at, or even lower than the all-time high would be better, because then we can max out the contributions by end of 2020 to $19,500. Which means it'd be much better investing, say, $15,000 or $12,000 when the stock market's lower than when it was at all-time highs. So you can see here my thought process behind investing. I believed in the market in 2019 in December. It was high and we'd go lower into 2020. So I reached out to my accountant so we could reduce the amount of money that I'd be investing each month from $1,800 to $1,700 in one of my long-term accounts, my 401k. Knowing we would probably go lower towards the end of 2020, I would ramp up my 401k contributions to take the full max. So say the stock market's much lower and you say, well, Connor, what if it's going to keep going lower? Why would you invest the money even at the end of the year, even if it is lower? Because you're allowed to max out $19,500. And the reason I want to do that is because if I put in that $19,500, regardless if the market's high or if the market's low, I then get to write off $19,500 off of my business revenue for the tax year of 2020. So say in 2020, Connor's company makes $100,000 and then Connor invests $19,500 of the $100,000 into his 401k. It will now appear come tax time that Connor's business only made about $80,000 in revenue because he took $20,000 of the company revenue and invested it into his personal 401k, and then he took the tax write-off of $19,500 off the $100,000. So that is why we're going to try to max it out towards the end of 2020 in anticipation that the market's lower. So even if it's higher, we're going to max out the 401k, but the goal is to see that the market's lower so that we can take that big chunk of money that we're going to invest regardless and have it be at lower prices, and then we can still take advantage of the tax deduction. So there you can kind of see my whole plan of why I chose to reduce my monthly 401k contributions and why I plan to increase them dramatically towards the end of the year, because I do think that the markets have potential to be lower, or maybe we even retest that previous low in the market. Now that we covered that, let's drop this email down. And now we're just going to kind of look at this chart here. And I'm going to make this very quick, very simple. Yesterday, I made a video kind of pointing out the bearish case for the stock market. And now I'm giving you guys more of the bullish case for the stock market. Yesterday, I pointed out that I would really like to be a buyer, that I would really like to be a buyer down in this zone. So what's the problem with Connor being a buyer down in this zone? Well, hell, Connor doesn't even know if it's going to make it there anytime soon. I don't know if it's going to be there next year, 2 years from now, 3 years from now. I really don't know. But I know for me that is a low risk, good buying opportunity. Whereas I know that up here and where we're currently at, it's not really a low risk buying environment. It's actually a higher risk buying environment simply because of how our channel is set up. And if you don't know what I'm talking about in terms of the channel, just go back and watch my video from yesterday called the 2020 Stock Market Crash Analysis, and then you'll kind of figure it out. So I know that down here is kind of the low risk buying environment. I don't know if it's going to take 4 years to get here, if it's even going to go there, if we're just going to go straight up. But I know for right now, to me, that's the low risk buying environment. So I've gotten questions on YouTube. Well, like, what if it doesn't get there? What if this is the bottom? What if it continues going higher? You're going to be an idiot. You're going to miss out on everything. No, I'm never missing out, because at the heart of it all, I'm always an investor. I, no matter what, always dollar cost average some amount of money into the market every single month, if not every other 2 weeks. So regardless, I'm always investing, whether the prices are high or whether the prices are low. As you could see from that email, in 2019, we were investing $1,800 a month into this market. Before 2020, we reduced that from $1,800 down to $700. And that was my 401k. And then I also have another, what's called a non-qualified retirement account, which doesn't get like tax benefits or anything like that. It's just simply like a savings investing account. That I would normally invest $200 a month into. When the drop started happening, I upped that to $350 a month. So there are specific retirement accounts that I'm kind of messing around with the monthly contributions, making them bigger, making them smaller. So one of my contribution accounts, I upped from $200 to $350 as we went through this drop. And then one of them I dropped from $1,800 to $700 before the drop, and anticipating that in 2020 we go lower. In that one, I will up back to $1,800 close to the end of the year. And then whatever's left to invest to take the full contribution of the 401k by 2020, I will then put in at the end of the year. So really, I think we're going to go lower. But the whole time we've been through this drop, I have continued to invest. Because the smartest thing any investor can usually do for the average Joe is a form of investing that's called dollar cost averaging, which basically means no matter if the stock is high or low, you're consistently buying, which means you're going to buy shares when they're high, you're going to buy shares when they're low, you're going to buy them in the middle. And what that does is it helps to balance out the average cost of your portfolio or your position, okay? And so it's really just an easy way for investors to invest. And actually, over the long run, it's statistically proven that it actually works out better than some people who try to time the market, okay? See, now if I would have, at the end of 2019, right, if I would have just dropped my monthly contribution in my 401k to zero, that means I would have missed that bounce, right? I would have missed that bounce. And that's why you dollar cost average, because you'll never know for sure if you're going to bounce here and then keep going for forever. So no matter what, I'm always investing. And then the egotistical side of me that thinks that I know it all and I'm a little bit smarter than the average person says, you think you're going to go lower in 2020. So what we're going to do is we're going to reduce from 1,800 to 700. So I'm still dollar cost averaging and investing, but I'm using the knowledge and experience that I have to also help time my dollar cost averaging investment to make it better than essentially just dollar cost averaging. Knowing that I can't time the markets perfectly, I always make sure to dollar cost average. But I know that I have a little bit more knowledge than the average person when it comes to the market, so I can time it a little bit better than the average person. And that's why I'm still doing that fashion, but I'm not doing it with just, a holy grail throw, saying, I'm not going to invest anything. I'm just going to wait till I think it's the perfect time and then dump all my money. because then if you're wrong, then it really hurts. Whereas if you just do it a little bit over time, and even if you are wrong, it's just a little bit, so it doesn't seem as bad, okay? So I want to come out and make this video to let you know that just because I believe the market's going to go lower doesn't mean that you should just completely stop investing or that there aren't going to be good buying opportunities even if the market goes down, okay? Now, the last thing that I wanted to touch was there was a comment from yesterday's video about my bear case on the market. And I had mentioned that I see the $1,800 mark as the low risk buying environment, and that's the place where I would want to put the money. And there was a question in a comment on YouTube that said, Connor, I understand that the $1,800 mark, or kind of that zone, might be the low risk buying environment for you. But how could you justify buying the price of the stock market going into 1,800? Because if the price was going into 1,800, then at that point, wouldn't the stock market be downtrending? And then you'd basically be buying a stock on a downtrend? And he raises a very valid point, which is very true. Yes, it can be dangerous to just automatically buy the bottom of a move when you think it's the bottom, okay? And the reason I say that is because, you know, the markets like to get a little finagly and they're not always perfect and they're a little irrational, right? So what I'm saying is, yes, this is the low risk and buying environment. Once it gets there, you don't have to blow your whole nut on one shot, right? You can take your time, go a little slow. I hear the women like that, you know, take your time, you know, make it last. That's so supposedly what they say. I've never heard it myself. I always have to read it on the internet. I never get that personally, you know, is what it is. But the low risk buying environment is going to be around 18 for me. If you are going to kind of trust that system, what I would recommend to you is wait until you see a divergence. The same thing that signaled the bearish correction in the market recently is the same thing you'd wait for on the bottom towards 1800. Let me explain. So you see these peaks in 2018, 19 or whatever, or that is 2018. And then you see this peak here in 2019, 2020, okay? Go down here and let's look at the relative strength index, RSI, momentum. What did it say? It was downtrending. So from these highs, all-time highs, to these all-time highs, it basically said the market was moving into new highs with significantly less strength as they were the previous time in 2018. So logically, how can the markets keep going into a new all-time high when the markets are having less momentum going upwards? It usually doesn't keep working. You'll usually roll over like this, okay? Want to see a very, very common similarity in 2008, bottom, 2009, ready? So Connor says that this is the low risk buying environment. So this is a low risk buying environment. Connor, but if you buy the bottom, you're still buying a downtrend. Yes, but you can start to size in as it gets to the low risk buying environment. Now, number two, what occurred in 2008, 2009 on the bottom as did occur on the top in 2019, 2020? A divergence. We had the bearish divergence here. And then what happened here? We had our low. And let me redo this. We had our low point, and then we had a new low point. So we're trending down. Let's go look at the momentum. The momentum says we are trending up. So you had the same thing happen in 08 bottom as the same thing that happened in the 2019, 2020 top, as well as probably going to occur the next time we enter the low risk environment. And the reason that happens is because everybody knows this is the low risk environment. So they start to buy, okay? But then there's still weak hands, and what happens is it shakes down and it tries to stop everybody out. But when that new low happens with less momentum, it signals that there's a bull move coming and you've probably reached the bottom. So think about it. A bullish divergence looks like this. When the price stops and then goes into a new low and your momentum stops and then it goes into a new high. When you get an opposing argument from price action direction to momentum movement, that's an early reversal signal. So don't you think that we should trust the bullish reversal signal when we see it happening in the low risk buying environment? And shouldn't we probably trust the bearish signal as it's happening into the high risk selling environment? Probably. So I don't know if it's going to happen. I don't know when it would happen, but all I do know is that if and when the stock market reaches prices of 1,800 or even down here to 1,200, if we do that, that's a low risk buying environment. And at the age of 27, I would be willing to put money in the market at those extremely low and bearish prices because I have the rest of my lifetime to live, unless I die tomorrow, which could very well happen, and that would suck, okay? That would suck. So my bullish case for the market is to continue dollar cost averaging. And if you're someone who runs a small business and you have a 401k, consider reducing contributions, because why not? And then just take the full max towards the end of the year if you can, and then you get the tax deduction, and then you're fully invested for the year and you've kept investing. So that is my kind of bull case video, and that's where my mind is at right now for my long-term investing, and then my approach to investing more if the stock market ends up doing what I want. If it doesn't do what I want, that's completely fine. How often does it ever do what you want when you want it? Not very often. So until that happens, I'll just keep following and investing dollar cost average with the market. And then when I believe the markets have reached prices that are way more desirable, then I'll take that cash that I'm sitting on and I'll start dumping it into the market slowly. Not all at once, but slowly. Maybe a couple grand here, a couple grand there, a couple grand here. So you're slowly buying the low points when you think they're the lows. Okay? And remember this, that the low points are going to happen, near, again, 1800, kind of that zone. So again, I hope you guys learned something from this video. I hope you guys like something from this video. Feel free to comment below, hit the thumbs up button, subscribe to the channel. We're constantly doing videos like this, and we're always doing live streams every single morning before the stock market opens. Everybody take care. Have a great rest of your day, and I'll see you in the next one.